Hello everyone, and markets just continue to point south. Exactly what we've been saying since the start of the year, and I'm sorry if you've heard me say that before, but we did say in the first week of January they could well be the highs for the year. It wouldn't be the first time. So that's what we have. We thought we'd have a 6 to 18 month correction. We're now into the 10th month of that correction. And I did say very early on, I think at the same time, who knows, it could be a 1 to 3 year correction. But why? I mean, really, we have to understand this is the global macro. Forget all the fundamental forces for a moment, shall we? I mean, there's a war in Europe, which could get worse. The US is already technically in recession with 2 negative quarters and is looking, the economy there continues to crumble. In Europe, you know, just the energy to heat homes and run businesses has a question mark over it. This is a great concern, as is the concern over the war. China has permanently reset itself to a lower trajectory of reasonable by Western standards growth, but nothing of the kind that China previously experienced. And that isn't because China's done anything wrong. That's because China has done everything right, and therefore its economy is reaching full maturity from a capitalist point of view in terms of the capitalist economic aspects of the Chinese economy. So good growth in China from having done everything right will continue, but at a much lower trajectory. All of this means the boom is over. Now, that's all very negative, and why I think stocks have a 20% fall still to come from current levels. And the reason I'm reasonably confident of that view is just how long and overextended investors had become. If you think of the crypto market and the big corrections there, I'm not saying the stock market's going to go back to zero like many cryptos, but the stock market is going to have a similar style correction in terms of market dynamics, just based on the fact that we saw in the history of the world. And mind you, I'm not saying this after the fact. I was saying exactly the same thing a year to two before. I said, are we in the 1927-29 period, which is that last couple of years of euphoria before a big crash? So I'm not saying anything I haven't said before, and I said these things back then, 2-3 years ago, that the world investment community had reached a point of what's called participation, the greatest participation in the history of humankind. That is, a greater proportion of the world's entire population was playing financial markets, and not only were they long and buying more, but they were using leverage to do so. Doesn't that sound a lot like crypto? Yes, it is. But but there is real substance to the companies in the stock market, but it doesn't matter. I mean, one of the interesting dynamics of markets is once everyone who wants to buy a stock has bought that stock, it can only go down. It can't go up anymore because everyone who wants to buy it has bought it. It can't even go up if the news is good. That's the point the US stock market had reached. Probably Europe and Australia too, but particularly the US stock market. That's the point it had reached January this year, and then there's a war. And then you have the hangover effect of the stimulus spending and zero rates. And then on top of all of that, you have aggressive central bank interest rate hikes, and even the ECB joining that party when it has a war on its footsteps. There is no track record for hiking interest rates to solve the problem of inflation when it's caused by supply disruption. The only one example of that ever occurred with the oil price shock was that the interest rate hikes drove the economy to its knees. That's at least what we're seeing here again. I mean, I was saying this as a left field, no one believed me forecast last year. Now people are at least open to the idea, but to me it's just so patently obvious the US economy is being brought to its knees, and there isn't even a baseline where the economy could fall to before it turns around. That isn't even in sight yet. You can't even begin to talk about that point yet. So we do not know how far this US economy will fall, and therefore we do not know how much of an economic slowdown stocks have to price in from the fact of a slowing US economy, from the fact of a war in Europe and all the super high inflation that has brought in. But forget all about that. Everyone was as long as they could possibly be, from the world's biggest funds, BlackRock, having massive redemptions and massive losses. Right? It's typical of all the major funds around the world, all the major traditional funds who just think it's a complete madness thinking buy the dip in a bear market. It's a complete madness. The idea that stocks always go up is a complete madness. You may have to wait 3, 6, 15, 25 years. Who knows? We don't know. Don't think you know anything about markets. I don't know anything about markets, but I'm open to the idea that I don't know, and therefore my mind is open to what really could be happening here. If there is any expansion of the conflict in Ukraine, stocks will really tank. Even without that, stocks are in a downtrend that now I'm starting to think, and I am one of the best callers of the US stock market in the world this year, I'm now starting to think that this could turn into a 3 to 6 year Western stock market correction. I think Asia is going to fare better. I think there's some upside perhaps in South America, but it is a very risque global economic environment confronting us. It really is. So don't take it lightheartedly as if, oh, but I'll buy the dip because everyone's wrong to get scared. That's not the contrarian view. That's the herd view. If you've been buying the dip, you're part of the herd, okay? Realize everyone's long, the funds are long, and all the fund managers and all their chief economists keep saying, oh, but this is a buy the dip opportunity, just keep buying here, I see value, da-da-da-da-da-da-da. And why do they keep saying it? Because their entire business model is dependent upon a bull market to get people to invest in their funds, so they just buy, buy, buy. And they rarely ever sell. Which is why when the point of capitulation comes for major global funds or even regional funds or national funds, it's going to be pretty ugly. I was thinking of a worse word, but I toned myself down to pretty ugly. I could be wrong. The stock market could bottom tomorrow. At the moment, there is very little sign of that happening. Okay, but when you reach your point of highest confidence, that's usually when you're going to have your biggest fall. I don't think I'm at a point of great confidence. I think I'm at a point of great concern because it could even be worse than this, one of the world's most bearish forecasters had previously thought. I've said all year, and if you've been following us, I hope you've done it. Protect your investment portfolio. Play defense. I've been saying it since the first week of January. I hope it's helped you. Just be aware, this is not a normal market. This is not a normal global economic environment. Don't treat it as such. Be aware and realize we have all the financial tools we need as individual investors, as global macro funds, it doesn't matter who you are, to manage the downside risk successfully and to, in fact, enjoy profit on the way down, which then allows you to be in a place of greater power when the market eventually moves up. We have those tools available. We just have to open our minds to being very directionally versatile. That's all we have to do. And remember, if the market turns back up, I'll become a buyer if it turns back up in a way that convinces me. I haven't seen that at all of this year. So, the outlook I have, more downside, the bottom isn't in sight for the US economy, the European economy. I think even Australia could have a surprise recession. So I'm seeing a lot of economic downside for a whole range of reasons. I am buying more oil. I was buying gold. It hasn't worked yet again, lost money on gold. But I personally, I'm prepared to sell gold now because I just think there's going to be a massive global deleveraging of everything except panic buying of the US dollar, and for some nations, for their reserves, panic buying of oil. I still see that scenario as being on the cards. I hope this alerts you. I don't want to scare you, but I do want to alert you to the potential downside risk. I hope I'm wrong. So far I've been right. I can't be right forever. At some point I will be wrong. But at the moment, I'm still feeling it. I'm feeling the downside. I hope this helps. Clifford Bennett, Chief Economist, ACY Securities.